Okay, guys, how we doing? Sam here with you. It's Thursday the 11th, and of course, we're now on a Thursday. We're looking at traditionals. So, per the polling this morning, it's the S&Ps out front. Here, we'll see how the others sort out here. So, I'll just get started here. Now, we've kind of been struggling with this a little bit. From an Elliott perspective, there's a hesitation to think that the 2 is in here because of the shallowness of that retracement. But as we can just continue to grind higher amidst the backdrop of what now appears to be a fairly certain rate cut in the near term, I think we've got to consider this as the more probable scenario here is that we're likely to that we're in a 1-2, and that is extremely bullish. So, even being relatively conservative on how far this can go, if we look at the length of this impulse here projected from the low, just a straight alternate projection, to get 100% of that puts us up here at 33.77. So this would be at that point where we can qualify this as a third relative to the 1-2 that's currently labeled here. So there's a pretty good amount of distance here. Now the subdivision within this, I'm going to take that off, right? So as we go up here, we've had no retracement. I mean, we've had very modest retracement, so we can't even get a 38. So I'm reluctant here to put a label on this. So where I am on the daily here, I should mention I'm on the daily. If we're going this high, if we're going to, well, let's just use the lower. If we're going to that level, maybe we're over here. So just using the second algo target here per the swing low retrace to the 38 first second target here. Somehow we're going to have to get there. We're going to need a second wave at this point here. You'd think that something along these lines would be shaping to give us this kind of a movement if we're going to go if indeed we're going to get a full motive wave and get an impulse here. So where's the 2? So I'm going to go from the daily. Let's go down to the 2 hour here. See if there's not a lot to work with in here. So it's making it difficult to trade because the retracements are so shallow. You keep looking for more, thinking, all right, well, there's a start on it, but as it, you can call it market manipulation, call it what you like. But note, we're kind of going through this stair step, and while there's some overlap here, but if we just look at this, these are very similar. Just looking at the actually, this would be good for the wolf tool, might be the appropriate tool here. So let's go to the wolf tool. So looking at this, if I can get this right on here. So here's the range. We've got 100% of that range. Here's 200% of that range. Do you see how we're just moving in this is absolutely almost like it's perfectly synchronized. So you look here and you go, all right, well, we just cleared the 200. So just taking this initial range here, this is the only retracement we get. And then we do the same thing here. So we go from the 100 back to, see, it's not to the tick, but we're pretty damn close. So you kind of look here and you go, well, that seems like the logical path. Now, of course, I'm sitting here Thursday the 11th. Powell is speaking right now. So barring something unusual happening in there, it's hard not to anticipate that we're just going to continue to carry on here in this progression that we're headed off next for the 300. Kind of interesting how symmetrical this has been on the move higher. So I don't know why you would. There's no reason to assume that we won't continue here this process here unless we get some jarring news. We don't really have anything on the horizon. So it's just kind of interesting. So where's your 2? If you're looking at this with your Elliott hat on, there's no 2 there. So I suppose you'd have to do it. I think you'd have to do just to try and put something on it. You'd have to do it this way. Yeah, we can do it. So you'd have to do something along these lines. So extension in the 1, very shallow 2. Is that, yes? So 1, yeah, 3, 4. Yeah, we can get this. So you can get. Hey, shit. 1. Can we get it? 1, 2, 3. 4, 5. Yeah, we can. So we can go 1, 2, 3. Now that's just out of curiosity here. If we've got even Right now, we're not going to be 100%. So here's 100% of the 1. So if the third, oh, God damn it, that frustrates me. If the third is going to keep going here, so maybe we 1, 2. It doesn't look like that's going to be long enough. So so this looks like the more probable 3 based on what we have to work with right now, because you wouldn't be able to go 1, 2. Well, shit, I guess you could actually. So remember, 3 doesn't need to be the. Is that? That looks like there's your 3 here. It looks like we got a little expanded B wave there. So that right there. So we're not quite. So if you're thinking 1, 2, 3, we're not quite long enough here. Of course, it doesn't have to be. 3 doesn't have to be the longest. In this case, if we're going to have an extension here in the 1, just can't be the shortest. So if we consider it this way, if we look at this from this low here, yeah, we got plenty of room here for before 5 gets longer than 3. All right, so just taking the length of what may be our third here projected from the 4, so we've got some room before that would become problematic here, i.e. 5 being longer than 3. So then 3 would be the shortest, but the shape is there. It's a little, the 2 is, as has been the case, you'd have to go 1, 2, big 3, 4, 5 like that. So the 2, the symmetry is not great between the 2 and the 4, although it doesn't, you know, this market's so strong. There's not much to work with here. So this retracement does look technical. So let's get. Just kind of making that point, how symmetrical this climb has been. So from this pivot here, oh shit, I got the wrong one on here. Let's do it this way. From this to here, let's get back to traditional. Okay, so we've come to the 50. Let me get this off. To and through, first target, so looks like it's well on its way to second target here. So again, back to how are you going to label this? I think you'd have to go 1, 2, candidate for the 3, 4. That would bring us right back to the median line. So that looks like where we are. So now, do you want to try to trade this here from the 4 to the 5? Seems more of a, I'm on a 2-hour here, just more of a swing trade here, not something long term, but not a bad looking little single here. This, you know, your eyes wants to see this, so it looks more like a 3, right? But we've got to allow for the 1, 2 here. It's a bit of a stretch, but at this point, since we've got to label it something, right? Now that's, of course, that can change. I would just be using as many tools as I can here, because yeah, let's do it this way. Let's go up. Yeah, we're kind of narrowing a bit here. Now let's pull this back out here. See if we can get some context for this. Oh shit! Come here. All right. So if this is 1, 2, this is about as much as we've got to work with here. This is, oh boy, the only real candidate we've got for a 2 here. I'm a little ill at ease with this 3, because the shape of it does look, you know, we can dig it out of there. Yeah, you can get an impulse in there, but it's a little bit of a, are we hedging a little bit? Are we force fitting that as a 1, 2? Maybe, right? So, but there's no, certainly it's not a diagonal at this point in time. So I think we've got to go with that until until something more substantial happens. If we get a bigger sell-off, where we could actually get something that would be a true 3 wave. So if we can get something like this to come down, then that's going to look a whole lot better. As your proposed here, I guess we can take that off. With this being the proposed 3 here, if we can get an A, B, C, but it just doesn't look like it wants to do that. Again, it just looks like that's where we're likely to end up by the end of the day. So where's the trade? Well, I don't see a swing trade here until we get to that point. So if we get up here and we start to get a retrace, now, do you want to try and short sell this? I wouldn't, right? So why fight? You know, this old saying, why fight the Fed, right? They are determined, for, you know, drawing your own conclusions as to why, but they're determined, it would appear, that this rate cut is coming. So if that's the case, boy, this, you know, that's likely to do this. So what are you doing here? It's just, you know, the anticipation is for a rate cut here in July. You know, So, so you need something to give you an opportunity to get in. Otherwise, you're buying this stair step here, which as we're sitting here at all-time highs, gets harder and harder to do. So I personally wouldn't be chasing the long here. Of course, the market is always anticipating, so it's already priced in the rate hike. So unless it's something that surprises the market, if they do 50 basis points, that would surprise the market. Of course, that's going to so that's always kind of the mixed emotions. They say, oh shit, well, if they're doing 50 basis points, do they know something that the rest of the market doesn't? So there's a little bit of that sentiment that surrounds if they do something surprising, but the consensus is it'll be a quarter basis point. That should be bullish for the market. So where's your entry? Well, you got to really, to do something that's technically responsible without just going, oh shit, let's just buy it, and trend is your friend. Here so look here as we sit breaking this series of highs. If we retrace, right, so this repeatedly, look, retrace, prior structure holds it, retrace, prior structure. If we go up and we come back down, right, so we need the up to give you the down. So then you might at that point be looking better up here as the 3. You got to watch for the subdivision here to make sure you don't go 1, 2, 3, 4, 5, and then 3 becomes the shortest, because you can look here, you can see that if this is 1, 2, you barely have a 3 here, so you could have. Jesus, this is tricky. So you could have 1, 2. You could have 1, 2, 1, 2, because these are going. Let's go down to the hourly. These are going in 50s. So from here, right? So we go here. Here's our 50. Here's our target. Then we do the same thing again. From this low here, here's our, well, we don't quite actually even make the 50, but we just come just shy of it. It looks like the structure holds us, and now we're kicking up yet again. So I wouldn't bet against that getting hit, but if we're going to get second target here, so Powell finishes, the market digests it, and the market always wants to go up. So it wouldn't surprise me that that's a push to get up here. So if you're looking for a trade, this is really the best thing that I can see that you can deal with here. In terms of any sort of short-term swing trading, we're down here on the hourly. Well, the other thing you might do here, just trying to get some sense of the fib relationship here. So if that's our 1, and big if this is our 2, well, see that then now we've got the 100% here. So now 3 is equaling the length of 1. So then you can kind of feel better about that 3 up here. So the trade that strikes me here is first we need to get this push up here. So note here that would be a return to the median line, right? So this, I got to get this tightened up there. So a return to the median line would get us right here into this hot pocket. So we'd have our second target, we'd have our 100%. So at least at that point, we can comfortably put the 3 here and know that it's at least equal to it. And if we get second target, if we get to the median line, which I wouldn't bet against, if we get to the median line, then we have a good contender for the third here. Then we're kind of working with the subdivision. But boys, there is just, where's your 2, right? See, then you're kind of tempted to think, oh, maybe 1, 2 here, and this is 1, 2 of a larger degree. It's too soon to go there. That's really the only thing you've got to work with. That's the only decent retracement we get, and this strikes me as part of the subdivision of whatever this third is here. So pulling that back out to, say, a 4-hour. Well, let's see. Let's reset here. From our low, so you see the set of median lines that I have on. So we have this 80% very much in play, even though it was shallow here. So the fact that we're headed towards this median line, again, it's 80% odds. Why would you bet against that? I sure as hell would not be looking for a short here. Now, if there's a shock to the market, something happens. If you got something that brought it down for whatever reason, it's not. You don't want to try and pick the turn here. You want to let it retrace, so you've got an internal retracement. Then you're looking for that. So I don't see anything that you might want to do here until we get either further clarification here. We feel better about this as the 3 at this degree. If you get even a shallow retrace, and there's a couple of things we could use here for structure. Obviously, we could use this pivot. So if we come down, we get something a little deeper here. coming down to that structure would be ideal. Then you've got that. Then you've got a lot more confluence here in terms of the push up to finish the 5 to complete what likely would be just the one wave of, so if this is 1, 2, and we're going up for a 3 here or higher, then likely this is just the one of the third that's going in now. But it's not, it's hard to be, well, that's the wrong word. It's impossible to have high conviction about where you are in the count here, considering, one, this is Fed driven, so we're seeing the market act in a way that's atypical. We just have no retracements here to work with, so it's a little bit risky here to be trying. You're making assumptions without really having the technicals staring you in the face, saying, "Oh yeah, all right, I understand where we are, what just happened. I'm at a high probability zone. I can take that trade comfortably." Right? We're always going to put a stop on it, but right now it's a little bit of a roll of the dice here. So, the other thing to keep in your back of your mind is when it looks like it's going to be easy money, it almost never is. So right now the consensus is, okay, Fed's easing, market's just going to continue to rally on. Well, all right, if it were that easy, so you're sort of mixed emotions between, well, let's not fight the Fed, let's not fight the trend. This sure looks like it's going to go higher with a rate cut apparently inevitable. Makes it feel like easy money just to be long. That always puts me ill at ease when it feels like, oh, easy money, let's just buy it. It's just me, right? Just experienced it from doing this for a long time. So I'd be a little bit cautious up here. I'd really, really, really wait for some sort of a push and then give me at least a 38. Give me some sort of a decent retracement here that I can buy into so I know the market's getting put on sale. A little bit of structure. Now there is, let me clean some of this up here. Some of my members, I'm going to take this off here. Now, I'm going to encourage you to keep that on somewhere, but just to clear up the chart and give us a little, get some of this out of here. Now, Grant, since we don't have any of this, let's see, go back to the daily. All right, so this is a few members and a couple of my senseis were making note of this. We're going to have a trend line here that's going to get challenged. So if I go from my 3 to my 5 and pull that over, we have this giant megaphone pattern going in. So we get this kind of thing. So what is going to happen? Well, so immediately when I see that, my first thought is I want to measure for fib relationships. So I'm looking here down to the low. I can't help but notice that here's the 618. So getting through that, now that's not relative to the idea that of anything other than looking for fib confluence between these. So I'm not making a projection about that as per a wave degree or a wave projection. But it's just kind of interesting to note here as we're going to come up and hit this trend line here. We're hitting that right at the 1618 or the 175. Kind of interesting. Now to get through that, here's the big target. Here's the 2618. So if this is going to go 1, 2, 3 up here, now again, note that's the 100%, the length of this one. That's putting us up here towards the 2618 of this swing relationship. I did notice this as well. It's not to the tick, but it's anything. I'm looking for as much confluence as I can. So this is really close, right? Almost to, we just missed the median line. Now we're going to come up here. We're going to challenge that upper parallel as well. So there's some structural. We don't have any price resistance. We don't have any. There's no volume profile. We're at all-time highs. So you're looking for things that you can use to try and get some geometry, looking for some confluence relative to the series of swings that we have here. So I think that this is one to watch, but the expectation is that we just continue on here and that minimum target for this 3 is up here. But of course, if that's going to go, if we're going to get a true wave 3, we're looking for this to go up to the 1618. That's putting us at 3,800. 1, 2, big 3. 1, 2. Boy, it's hard to vision. So then you would look at this, and let's pull this over a bit. So this likely just was going in here is just the 1, 2, 3, 4. How else are we going to get there? We need something like that. All right, so whatever is happening here with this challenging subdivision here, if this is 1, 2, likely what's going on in here is just the 1 of the next degree. So the opportunity will be here once we get a retracement of some sort here. So the trade that we're after here is this trade. Where's the start of that? That's the trade that I'm after here. So give me this completed motive so that I know if I've got 1, 2, 1, 2, and I'm coming back here to decent structure, I could just, we can just simple stuff. Get me through that, bring me back to test it from above. I'm all over that trade. But it's not there yet. We're still kind of trying to, is that a 1? Is this a 1, 2? It's a little bit shaky. But if I can get up through it, then likely there's a retest from above. It's nothing's guaranteed, but that would be just kind of thinking it through what you might anticipate, because you've got structure here you can come back and test. Right? This had been the resistance. Now we want to test it from above. Does it hold as the support? Then you've got, this is the trade you want. Now you're launching, and you're likely here, I'm just going to throw this up here. So there's the 50 coming in. The 50, well, look, shit. Again, I don't have this pivot, but this range that I just drew here, just using this pivot and this pivot high as a potential buy zone conveniently. Again, I don't have this, but note how that lines up right at the 50 and the 618. And then again, remember how symmetrical we've stair-stepped through this, moving in almost perfect hundreds and 50s. So a push up, give me that. Man, I'm all over that. But it's not there yet, right? So patience, I think, is what you got to exercise here. All right, don't force it, right? Remember, easy money. There is no easy money. All right, guys, talk to you later.